Well, Starbucks just out with its quarterly results, earnings coming in at $1 a share, beating the street's estimates of 95 cents. Revenue missing the street's expectations at $9.17 billion. The estimate was for $9.28 billion. Same-store sales also falling short, rising 10% versus the expectation of 11.1% for the U.S. Comp sales rising 7% against the U.S. 7.7% estimate. Akiko, one bright point here in this earnings results is really what we're seeing in terms of China. We know China was a focus in this result here. China comp store sales coming in, increasing 48% or 46%, on a year-over-year basis, beating the street's expectations of 41.8%. So a bit of a recovery playing out in China, but not enough to offset some of the weakness that we're seeing elsewhere, with the stock off just about 1%.
Well, in China, you could argue when you look at the stock moves, sort of investors looking at that growth in China, yes, that's really good news. But at the end of the day, the broader trend is slowing growth for Starbucks. Mm-hmm. When you think about where this company has been, they have really benefited in a big way in the return to office with those ticket prices going up. They've been able to push those prices higher as well, looking at record sales in the quarter. But broadly speaking, that is starting to slow down. And I think you see that reflected in the stock as well. You talk about same-store sales being a miss. North America same-store sales also a miss, coming in at 7% growth as opposed to roughly 8%, a little more than 8% that was expected. The other thing that kind of stood out to me, just looking very quickly at the report that came out here, operating margin of 21.7% contracting from the prior year. Companies saying specifically that was driven by previously committed investments in labor. In that labor story, to me, I continue to watch with Starbucks. It's going to be interesting to hear what kind of commentary we hear from them. It's not just about the union moves that we have seen, but also just about the broader labor market. Starbucks really always a pretty good indicator about where those labor costs are. So that'll be interesting to hear what they have to say on the earnings call.
That will be very interesting, and something that I'm sure analysts are going to want to know a little bit more about. When it comes to some of the average ticket prices here, this jumped out to me as well, Akiko. That rose 4%, beating the street's expectations of a 2.5% climb here. In North America, the average ticket price was up 6%. International was up 2%. We talk about the fact that people are paying more for their goods every time they go to Starbucks, paying more for whatever it is that they're buying. So the average ticket price is there, increasing on a year-over-year basis. We also know that they put a lot of emphasis on their loyalty program. That was up 15% from a year ago to 31.4 million. So critical here for Starbucks in order to get those returning customers on a regular basis. What that's enabled the company to do in terms of growing their revenue at a time, like you were just saying, with growth slowing just a bit here in the U.S.
Yeah, those loyalty points increasingly important, not just for Starbucks, but so many of these, sort of food and beverage companies. That just makes it a little stickier at a time when consumers are increasingly having less and less discretionary spending to be had. But of course, we're going to continue to watch the stock move there. The shares of Starbucks off just about 0.2% there.